And hello, everybody. This is Scott Bauer, the host of the #Investors podcast. And today we have Dino Pierce with us. How are you doing, Dino?
I'm doing good. Thanks. And thanks for having me.
Appreciate you being here. Dino is the CEO of Edified Equity and is a multifamily syndicator. It works closely with private investors, family offices, and ultra affluent families collaborating on deal-specific equity positions. So I'm just going to leave that intro short and sweet, but Dino, why don't you give the listeners a little bit more about your background and what you're focused on now?
Yes, thank you. I appreciate it. So, that's right. My main focus is syndication, specifically multifamily. I would pursue other opportunities if the right partners were in place, but the main thing that I've done and my sole purpose and focus is multifamily. Okay. The reason that I like multifamily is because the demand's there. Of course, you have to know how to choose your market, but the demand is there. People are going to need a safe, affordable place to live. And I try to put that first and foremost to give me that juice to keep me going. And remember that there's a why tied to the financial benefit. So I really like the multifamily space because, again, people are always going to need a safe, affordable place to live. And on top of that, and maybe we'll get into this in a little bit later, but it is tied to my why. Multifamily is how I personally have chosen. Again, don't get me wrong, there are many ways, but it's what I've chosen to leave my generational wealth and kind of make my mark in the space.
Right. Yeah, absolutely. How long have you been doing it for?
So I've been real estate when I was in college, I did some subleasing on apartment units, but I don't even count that. Really, like focused on real estate for a little bit over 4 years now. And I would say the first 2 years of real estate investing was basically how most people get involved. I was doing a lot of the work, doing my own marketing, working directly with sellers, finding a good deal, getting it into contract, and then flipping a piece of paper for a very small but quick profit that, by the way, was heavily taxed. And it's one of many reasons I don't do it anymore. But it didn't take me long to realize that I was, as they say, I was selling the cow instead of keeping it and selling the milk. So what I started doing was I would approach residential fix and flippers and say, look, I've got this deal under contract. I've already had a contractor walk through it. Here's the comps for $50,000 in 6 months. We can sell it for X amount. Here's the days on market, but I don't want to wholesale my contract. I want in. Here's $25,000, no points. Use it as part of the fix-up. We're going to do simple interest, settle up on the back end, and we're going to do some profit splitting. So I didn't even realize this, but that was syndication. And right. Yeah, it was syndication. I didn't realize it was syndication, but I was part of syndication. So 4 years of that. And then did that for 2 years, did some private money lending as well. And really, I had a friend of mine who kept saying, look, I also run a medical device business. That's no secret. Everyone knows that. And I really get a lot of passion and a reward from doing that because we're helping people. But I had a buddy and he kept saying, look, you're doing great with the fix and flips, the lending, the wholesaling, medical device. But he's like, in my humble opinion, you're much better off learning about multifamily syndication. You have the wherewithal to do it. You're the type of person that can build relationships. You're genuine. He's like, I think it's perfect for you. And I don't know, it must have took him like a year and a half. And finally, I always say, I don't know if I was having a rough day or what was going on, but one day I woke up and said, I should learn how to syndicate multifamily apartment communities. And that's, how I got my start. I took about probably 6 to 8 months to really just study the business aspect. And jumped right in, started networking with brokers, researching markets, learning how to underwrite. And I'd say it took me probably almost a year to actually close on my first deal. But that's how I got started, and it's how long I've been investing in real estate.
I think a lot of people start off in a wholesale market. I know I did. I actually started as a realtor to begin with.
Yeah.
Then learned how to wholesale. We've now wholesaled coming up on 200 properties in the last couple of years. And, wow. I've also moved into the syndication space.
Right.
And something that I think a lot of people shy away from because of the large numbers. And the difference is that a syndication, it's just numbers. It's just extra zeros, but it really benefits everybody involved. You're helping communities, turn them around to make them nicer. You're giving a better tenant profile. You're helping your investors having some good returns. I mean, very, very good returns on these syndications, which this isn't the stock market, right? So it's not this intangible thing that you can't see, feel, and touch. Real estate's a real thing. You can go visit it. You can see it. You're part of it, right? And so multifamily syndication is it's an awesome asset class. That is for sure.
Yeah, and you hit the nail on the head. That's the three things that I always remind myself. The people that are going to live in the community, and this is when you invest into B and C class apartments and operate to improve the living experience, make it safe and affordable, you're impact investing. So I like that. I think of the people we're helping, the investors that are getting a return, and that comes with unique tax benefits that are almost unheard of in any other investment. And as operators, we have a lot of control over what the outcome is ultimately. And then my family. Those are the three things that I always keep in mind.
Yep, absolutely. And so when it comes down to the multifamily syndication side, you mentioned B and C properties. Is that your target? Is that where you go?
It is. Yeah, we look for, desirable would be, because if you ever find this situation, there's probably a big value play on the table. But if we can find a C building in a B area, or even, the building's a D, but it's in like a C or C plus area, we can come in and add a lot of value, increase on natural turnover. Granted, there wasn't a bunch of vacant units, but we look for things that are cash flowing on day one and that we can come in and add value to, whether that be from the operations, because a lot of one that I'm looking at, right now is what they call mom and pop, owned and operated. They're not using a property management company. They've owned it for years and they just never increase the rents. And it's one of those things where we know everybody, and I understand that. I think a good market strategy is to be a little below market, so you keep the occupancy high, vacancy low, but they let it go too far, so much that it's hurting them. But again, times change. They bought it right, and they were happy with the cash flow.
Yep, absolutely. And I think it's also important to touch on B and C class properties being a bit resilient to market change, because let's say the markets fall. Now, all of a sudden, everybody in the A class units needs to move into the B class and vice versa going down the line. And so therefore, you're a bit protected when it comes to investing in these assets, right?
100%.
Like I said, it's one of the coolest things that I've ever learned about. It is something where you can leave generational wealth behind, and everybody involved in the transactions and then the deals gets paid handsomely, so to speak. And really, you can get paid three ways, right?
Yes.
So that's very cool. Now, you had mentioned different areas that you're investing in. Before the call, we talked about you're looking at some different properties, different parts of the country. Let's talk about that for a minute. Why are you looking at these different areas? How are you sourcing these deals? And that'll bring me to another point once we go through that.
Okay. Yeah, we look at different areas because we have to follow, as areas get hot and we get priced out of the market, we have to follow the numbers. So we're looking for areas that are undervalued but still have high yield. They might be a secondary market that's going to benefit from the growth of the major market. And we're not geographically constrained to a certain area, because I'm not going to personally manage it. We're going to manage the managers. So I always like to use an analogy is like the property manager can make or break the investment. They're the quarterback of the team. We're the coaches, and we're going to guide them and make sure they're following the plays that we want and executing on our business plan. So multiple markets, simply because it has gotten tough. So for example, and I don't own or operate anything in Denver, Colorado. I don't even underwrite things here, because the economy is here, the diversity of jobs, the people want to move here. Everything's in line, except the cap rates are 4, 5, and 6. And then when we truly underwrite it, they get compressed more,
right?
Because we're conservative and we use, real life figures. But that's why multiple places across the U.S. But if you threw a blanket over it and you look at where we are, Louisville, places in Texas, Alabama, we're looking in Oklahoma, even some parts of Chicago. If you threw a blanket over it, you can say the Midwest and the South is where we are. And And then other asset classes only if the opportunity is one that would be an opportunity of a lifetime to partner with a really superior, well-known, trusted, credible operator in the industry.
Yeah.
That leads to other opportunities.
And I agree with that. I have 120 units in Lexington, Kentucky, and it's a very strong, stable market. I really enjoy that type of market. It's something where cap rates it's a safe environment. I mean, even when the markets change, we look at that over the last 10 years, and that market really didn't have a big downturn or upturn in the last 10 years. They've had, and so those are the type of markets that I like to look for. I'm personally from Des Moines, Iowa. Des Moines, Iowa is in smack dab in the middle of the U.S., and it's growing like crazy. And so we're actually looking at and underwriting some deals in Des Moines, Iowa to see if that might work. Because once again, we see job growth, we see stability of the market, and cap rates that can go right along with that.
Yeah, it's funny you say that. I had an opportunity. I did not move forward with it, but I had an opportunity to actually invest or be on the general partnership team out in Iowa. And I just had lunch yesterday with an investor who is underwriting opportunities in Des Moines. So it's
really?
Interesting that you say that. Yeah.
Well, we might have to talk about who that might be. We might know the same people.
You might. You very well might.
It's just one of those things that I'm in Phoenix. Phoenix is one of those markets like Houston or like any of the other large markets that we've heard about over the last 5 years that are just booming. I mean, they're booming. A lot of economic activity that's going on here, but it's not necessarily conducive to buy properties today because I feel that we're getting closer to the top of the market, right?
Yeah.
Well, let's talk about that for a minute. How do you feel the environment is? How do you feel the the economic environment of the U.S. is right now? Where do you see this going?
I think it's strong, and you and I are in the right asset classes so that when there is a quote unquote correction, when the market corrects itself or whatever it's going to do, we'll see cap rates, rise again, but we're in the right place. So that B and C safe, affordable asset is just like you said earlier in the show, the people who are living in A class that are paying like mortgage equivalent rents are going to come to the B classes.
Yep.
The people who maybe they're in a life situation where they're forced to relocate and they can't sell, they go underwater, whether it's a short sale or a foreclosure, they relocate. Unless they have family members there, they're going to go to a C or a B apartment community as well. So I think that while we might have to adjust our rents slightly with market, occupancy is going to be elevated. When we underwrite, you just want to make sure that debt coverage ratio is in the right place from day one. So that way you're always going to cover your debt and turn a profit. So I am not, being in multifamily, I'm not concerned. Now, if I was a developer or I was buying A class, I would have a different story. I'd probably say, I'd either be living in a fairy tale land or say, I think about this at night.
Yeah. I mean, one of those two things. That's exactly right. I guess let's back up. How did you get started? When you did your very first deal, how big was it? How did you raise the capital for it? And was it a partnership syndication where you were raising money with other investors, or did you jump on board with an experienced investor?
Yes.
Talk about that.
Yeah. So the first one, again, took about, now the first one to close took 11 months. There were 3, if I remember right, that we were working on, even started going around to investors with sample deal packets, getting soft commitments, but just, again, because of the conservative underwriting, they never made it to the closing table. So I think the one that actually closed, my first one, was the 4th opportunity I had worked with, which was actually, it was good because by that time I was experienced. I knew how to talk to investors. I knew how to go over the deal packet. I knew what they were going to ask me. Yeah. And I was prepared from the get-go, but it was, and still to this day, I partner with experienced operators. I'm a go-getter. I am the kind of person who's like, you feed me enough information and I'll go out and do what they call fail forward. And I was willing to do that with everything except other people's money. So when it came time to actual operating, I needed people who were very conservative, who were going to say no, because they don't have to do a deal. They're in a position where they can cherry pick and only do deals that make sense and are like home runs. So I did a lot by myself as far as meeting the investors, getting them through the SEC qualification questionnaire, making sure they could actually participate in a 506B. But it was a true, and it still is for me, a true team sport where we had more than one person bringing equity to the table, and we were all contributing to the general partnership role, whether that be underwriting, double checking underwriting, doing site visits, managing the manager, bringing the deal by networking with brokers. So we all have legitimate executive roles in the company. And again, it's a team sport. So that first one was right under 60 units. And when I think back on that and even carry it into my thinking today, I'm actually writing a white paper right now on how to source deals in today's competitive market. And one of the bullet points and things that I go through in detail is weigh your ego with your unit count. There's a lot of people that are doing multifamily that simply won't look at something that's about 50 units. Like if that's not 100 units or more, they're not even looking at it. Well, that gives people like us an opportunity. And I'm not saying go small like a 12-plex, because you want to be able to scale and support professional property management. But when I think about what we've done this year, it's all been right around in the high 40s, low 60s.
That's tough. So I actually we were in contract and going through due diligence on an 18-unit property here in Phoenix. Yeah. And we're lucky to find this thing. It was off market. It was through direct mail, direct source to seller, where we got this deal. And we ended up getting out of it because of our extremely conservative underwriting. And it literally got down to the last day due diligence where we had to make that decision. And I feel very confident in that now because, at the time it was like, man, this thing at first was going to be a home run. It was going to be great. We're going to get in and out of it in a year. I have management all set up. We have everything set up correctly. But at the end of the day, when we got down to it, it just wasn't the deal. And I wasn't willing to risk other people's money in order to make that happen. And so that was, on the one hand, to go back to my investors and say, hey, we're actually not moving forward with this. I'm sorry. That was way better than going back to them and saying, hey, we move forward with this. And, I need some more money.
Exactly. Yeah. And I tell, when I sit down with an investor and go through a deal packet, the first thing I always let them know is, I'll run through a pretend scenario, unless I am putting unless it's a real scenario, but let's pretend this was the situation and we're both putting in $100,000 into this deal. And I would be honest with you, say, Scott, if for whatever reason this deal were to go south for some unforeseen, a train something happened that we just never could have thought of. A train hit the building and it collapsed or whatever. And I lost my $100,000. In all honesty, I'm the type of person that, okay, that was an expensive lesson, but I'm going to make it back. It's $100,000. I'll get that back. Right. What would make me lose sleep at night is thinking about people like you and the other investors who this was their hard-earned savings. They've got children. Like that would literally eat holes in my stomach. So I'm more conservative for other people than I am for myself, again, because I just think I have the wherewithal to say, no matter what happens, I'm always going to make it out.
Yep, absolutely. And that's a huge mentality, really. Be more protective of other people's money. I know that I can navigate through a lot of different stuff. Even if I was to lose my $100,000, I know I can go make that back fairly easily. But some other people, that's not the case.
Right. Yeah, I know.
So how big is your operation now? How many units do you have under management? And, on the day-to-day, do you have somebody out there scouting deals? Do you have an underwriter? Do you have, what does the operation look like?
Yeah, and again, it's still, and I think for a long time, I'm going to run it this way just because I enjoy it. And I'm also, we talked about earlier, I have 3 little ones that keep me going full time, also run medical device business. So I'm already spread thin, and I like the aspect that this is very much a team sport. So I would say collectively, don't hold me to anything, but collectively, being conservative, $65 million in assets under management, over 2,000 doors with the group that I've aligned myself with by adding value, bringing my expertise, my elbow grease, as well as my network of capital to the table for deals. And so on a day-to-day though, to answer the question is yes, we have people in addition to me sourcing deals, constantly underwriting. They're using our conservative methods. And I would say 98% of these never even get looked at because we kick them out in the underwriting process, like just looking at the OM. And then we've got people out going on site visits. We have sponsors with the balance sheet. We've got, of course, the track record to take anything that we would want to take down. But it is a team sport.
Absolutely a team sport. It's super, super fun that it's a team sport.
Yeah.
And we talk about in single family, it's very easy. And actually, this was me at the very beginning, very easy to start off your career as a lone wolf, right? And you can make some really good money and go do everything on your own, but it's not scalable and it's not, you can't do it forever.
Right.
When you jump into the multifamily space, now all of a sudden it becomes a full team sport. You need, a sponsor, you need management company, you need a rehab team, you need all the different pieces that go into the puzzle in order to make it work. And once again, everybody wins, right? That's the best part.
Yes, everyone wins. And the other thing I didn't mention is just as something else of value that I'm bringing to our group is the thought leadership. And, what I'm doing actively as far as guest podcasts like we're doing today, my own podcast, my blogs, what I'm doing in a closed Facebook group. So I think being out there as a credible example in the space and helping other people genuinely, there's nothing, I don't sell anything. I don't have a course or a book. I think that helps. And whether or not a person who's, for example, reading my blogs or in my closed Facebook group, whether or not they invest with me ever, at least, again, it gets tied back to giving. And the 3 whys, it's like the people who live there, the people who invest, and of course, my generational wealth. But it's like at least I'm turning them on to an alternative investment that they probably didn't even realize was in existence. Because I didn't know. I didn't know you can own an apartment building. I had no idea. I thought it was companies or, ultra affluent families. I just never think that I could be a part of it.
Yeah, and that's huge. That is so big. So many people don't understand that it is possible to do it as an individual. Even to grab a piece, as a limited partner on something is, makes you an owner technically, right?
Share ownership. You share the tax benefits.
Yep, absolutely. And so, it's a very cool asset class. Where do you believe yourself to be 5 years from now? If you've accumulated 65 million, around 2,000 doors in the last 4 years, would you say that the majority of that happened pretty quickly, like within a year, or was that pretty evenly spread out over the last 4 years?
Yeah, well, let me be, I think honesty is the best policy. I'm leveraging the assets under management that the group that I've aligned myself have. That's not personally part of my portfolio, but I can answer your question. I think in the next 5 years, personally, if I could say in the next 5 years, if I could add and be part of and have my hand in as a legitimate team member, an additional 2,000 and roughly, 60, 70 more million under assets under management, I'd be happy. I'm being conservative. I think I can scale it up a little bit faster than that, but I'm always looking to add value, and I won't put a cap on what I can do this year. What I will tell you is if in 5 years you call me and say, hey, do you have those 2,000 units we talked about 5 years ago? If I don't, it means it's only because I didn't come across 2,000 that made sense. Yep. And I'm not willing to put capital at risk. I always like to say I'm an investor. I'm not a gambler. That's right. Yeah. Investing is not gambling. It is absolutely not gambling at all. We don't risk our money. Matter of fact, I don't know if I'm going to jinx myself by saying this, but I have not lost any money at this yet. Good. Yeah. Because of the conservative underwriting. And I think everybody out there, all the listeners that are listening to this now, should feel the same way. Just be super conservative and pass. Some of the best deals you ever have are the ones you pass on, right? Yes. I've had an investor with one of those first 3 that ended up falling on a contract. One was it was 100, almost 120 units. So it was like, I think you said you just did 120. So you know how that feels. It's a nice size. I mean, it's not giant, but it's not, 20 units. It's something you can have pride of ownership in. But it's just like, hey man, it didn't work out. There were some contracts in place that ruined the returns we could not get rid of, even though it was transferring ownership. And he told me, sometimes the best deals are the ones that we don't do. And he's right.
Yep. And it's so true. I forget who told me that originally. It's been probably 3 or 4 years ago, but they're very intelligent people, because that's a very true statement. So, that leads us into, kind of a lightning round. Are you ready for a lightning round, Dino?
I'm ready for the lightning round, yes.
All right, let's get into it. What is your hashtag invest this tip to keep our listeners moving forward?
I think I know my hashtag invest this tip would be chunking your time, because when you ask people, you're like, what can I help you with? It seems like, and when people ask me that, what can I help you with? I'm like, I need more time. And that just isn't going to happen. I can't manage time. It's slipping away right now. So I have to be really aware and deliberate how I'm going to use my time. So I have what I call a chunking system, and I do this every day. It's a piece of paper. It has 24 hours right there. I chunk literally everything from how much of that's going to be sleep. Okay, here's what's open. Here's my to-do list. How can I transfer my to-do list over to the chunking sheet? And I use my iPhone with alarms to even keep me on track. Because if I had, for example, set aside from 9 a.m. to 10 a.m. for writing a blog, at 10 a.m., that phone needs to go off and say, hey, I don't care if you're not done. You didn't accomplish it, and it's time to move on to the next task, or reprioritize your day. So I use a checklist and a chunking system to keep me on track so that I can take advantage and be the most productive with my 24 hours a day.
That's huge. Something that I need to do a better job at as well, because we get so sidetracked doing so many different tasks that it all gets stuck in between the ears. Yeah. And all of a sudden, you just feel scatterbrained. And I'm victim of that as well. Mm-hmm. I think that takes, you have to be committed in order to really write that stuff down. Do you do this on a daily basis, every morning or every night?
Yeah, either or. Usually it depends. So I find sometimes at night, if I do it before bed, so I'm not saying I get a ton of sleep, but it's on my mind the last thing before bed, and it kind of keeps me awake. And because then I know I'm like, okay, at 4 a.m. or at 3:30 or at 5, whatever my day's planned to start, I'm like, the alarm's going off and I have to do X, Y, Z. So sometimes I'd rather just say I'm going to wake up at 4 and use 4 to 4:30 to actually do the planning for the day. Now, it's all out on a calendar. So I have a calendar of things that are going to happen. Like, they have to happen that day. For example, today I have to have this appointment on the calendar. I'm going to be committed to it. But there's other things on my check sheet that I should be doing every day. Those are the things that I take the calendar and the check sheet and transfer them over to my 24 hours. But yes, it's either every night or super early every morning, and then I attack it.
Yeah, I really appreciate you sharing that. That's a huge tip.
Yeah, and I give it, sorry to interrupt, but I give it for free. I even had it on a Facebook post maybe a few months ago, telling people this is what I do. Anyone who is interested, shoot me a private message, and I emailed it to them, because again, I have nothing to sell. There was no catch. It's not like, hey, but if you send me your email, you're going to my mailing list. That was nothing like that. I literally just sent them the chunking system. So.
Yeah, no, that's huge. That's a great way to give back. And I'm sure a lot of people, we all have the same 24 hours in one day to work with.
That's it.
So prioritizing and putting everything in the right strategy and in the right system probably is very beneficial. So thank you for sharing that. Do you have a favorite book that you've ever read that's had a major impact on your life?
Yes, I do. I mean, and this is a tough one because there's so many good books out there, but I'll just say this: Truth is Timeless. So How to Win Friends and Influence People by Dale Carnegie.
Yep.
I read it a long time ago, and I really, really liked how he had some things worded, and it showed people. And even at that time, not today, but at that time when I read it, I was like, influence people. I don't know if I like that. And the truth of the matter is, it really he shows you how to treat people and how to make everyone come to the same understanding. You're not really persuading them. You're showing them. It's almost like having an open conversation and saying, hey, maybe we're not seeing things the same way. Let's hear each other out. And it's helped me with negotiations. It's helped me with talking to people, with parenting, writing emails and letters. So I love that book.
Yeah, that's a huge book. I've read it. It's probably been 4 years now.
Yeah.
And I told myself I was going to read it once a year just as a reminder of what's going on. But as you know, time and things get in the way, and the year flies by, and all of a sudden I've read 10 other books. So
what
it is. What about advice? I know that I am a very big, proponent to coaching, mentoring people that have been there, done that, to give me tips and advice. Who's been that person for you, and what advice have they given you?
So I want to take this one back. I have so many like mentors and coaches and influential people in my life, from, grandparents, which is probably, this is who I'm going to choose to give the example. But when I was, and I'll tell a quick story, when I was, it was between the ages of 11 and 12. I wasn't a teenager yet. I was still pretty young, maybe even 10. But I've always been a strong swimmer. I'm from Southeast Louisiana, so I grew up in a place that, probably literally had more water than land. It was, southeastern tip of Louisiana. So I've always been a strong swimmer. From what I understand, I was swimming at like 2 and 3 years of age. But we were camping, and we were swinging on this swing, letting go and landing into like this creek that had a deep portion where you can land safely. It was a blast. But in my mind, for some reason, I wanted to swing across and land on the other bank, almost like Tarzan or something. Okay. So I don't know why, but I went to my grandmother, who was with us on the camping trip, and I said, I want to do something, but I'm scared. And she instantly like clicked into like mentor mode. And she said, baby, you have to learn to face your fears. And I think one of the best things you can do is get on that swing across, and land on the other side. And so that was the first time someone had told me, because I know now people have told me 100 times since then, you got to face your fears, you got to face your fears. She was the first one. So watch what happens. I'm going somewhere with this. I do it. I land on the other side, and what I was scared of was to hurt my knees or ankle. In all honesty, when I hit the hard, because it was wet packed sand, my ankle did hurt. But at that exact time, so first of all, I did it. I felt good, even though it was a little hurt. That exact time, there were 2 girls swimming, and one of the little girls said, "My sister's drowning." And all I can see was her hands up and down, no body. I had positioned myself in the perfect place. I didn't even think about it. I ran almost like a fullback with a football trying to break through a line or get into a touchdown. I ran and literally threw her onto the bank, and then put myself in a tough spot. Even though I was a strong swimmer, I was able to let the current push me to branches and climb out to the side. When I got out, people literally at this, it wasn't a beach, it was more like a creek with a sand.
I know exactly what you're talking about. Yep.
People, adults, were standing up and cheering and clapping. So between the age of 10 and 12, I was told, face my fear, and literally a split second later, I had saved someone, possibly saved her life. And when I think back on it now, every time I've faced a fear, because fears still come, I'm not like saying I'm impenetrable to fear, but every time I've faced a fear head on, it has always been exhilarating, and something positive has come from it.
Yeah, you get outside your comfort zone, and that's where the true magic happens.
Yes.
I appreciate you sharing that story. That's an amazing story. You probably did save her life. And I think that's a good story to back up the fact that you need to spend every day getting uncomfortable. Do the things that make you a little bit uncomfortable, because on the other side of uncomfort is the riches. That's not necessarily money, but that's, saving this gal's life or whatever it might be.
Yeah. So I'll never forget that. And, I think it all happened at the right time. And like you say, it's on the other side. Once I had crossed that fear, it had positioned me to do instantly something very good that maybe no one else on the beach could have gotten to her that fast. If I would have let go and just went into the deep body of water, maybe never would have heard the other girl screaming, "My sister's drowning." So great example.
Absolutely. Thank you for sharing that. How do you like to give back, Dino?
I give back through the thought leadership. Again, I gave away the chunking system, but I write. I'm pretty prolific writing the blogs. My blog is on Bigger Pockets. Actually have been won a few awards for Bigger Pockets for my blog and thought leadership. The closed Facebook group is, it's closed, but it basically anyone who wants to join, they just answer 3 questions and I let them in. I never turned anyone down, honestly. Doing my podcast, guest podcasting, and I am working on a book. So, and all of the things I've mentioned previously, none of them cost money, and I don't sell anything. And there's nothing wrong with selling. I'm just saying it's literally me giving back. And even the book that I'm working on, I've been working on it for a while. I'm not going to rush it to completion because I want it to be really good. Even that, the e-version, the PDF is going to be given away. And whatever Amazon says, hey, it's going to cost, I don't know yet, but let's say they say it's going to cost $5.60 to print it. Well, guess what? That's what I'm going to sell it for because I don't need to make a penny. I just want to get the word out. And it revolves around this phenomenal alternative investment that we are talking about today, which is multifamily.
Absolutely. Yeah, that's huge. And really, that's how you really, make your point in life, right? I mean, if you give away all your materials and you live a life of abundance, then, after you're gone, people are going to see that. Who cares if you made a bunch of money, right? It's all about giving. That's why I have this podcast, is to give out, is to give information, have interviews with people like yourself that can add a ton of value to the listeners and really keep them moving forward. So I appreciate that. How can the listeners reach you? If they want to learn more about you, how to get connected to your closed Facebook group or anything like that, where can they find you?
Yeah, well, I'll give you the links for if you want to put in the show notes on the Facebook group, but they can look me up on Facebook, Dino Pierce. They can connect with me actually on the website. There's a contact me, and that email goes right to me. We can even set up a complimentary, call just to touch base. It's pretty, and also my blog on Bigger Pockets. So I'm not hard to find. You can find me any one of those methods, and I'm happy to communicate in the Facebook group or on Facebook, Bigger Pockets as well, and again through the website.
Awesome. Sounds great, Dino. Well, hey, I appreciate you sharing all the information about your multifamily syndication, how you got started, what you've been able to accomplish in the last 4 years, accumulating $65 million in assets under management, over 2,000 doors, and really doing that by being a team player and adding value and bringing value to other people that they have allowed you to become part of their team as well. And so that's huge. I really appreciate you being here, and I look forward to staying in touch.
Yes, sir. Thank you so much for having me. I appreciate being here as well. Thank you.
Yeah, sounds good. We'll talk to you real soon.
All right.
Okay, bye-bye.